Good morning, everyone, and thank you for joining us on Morning Markets today from True Potential. This morning, we'll focus in on asset market performance from yesterday, touching on some of the economic reports that we received, and then look towards the day ahead and what we can expect. So just looking at across asset markets yesterday, not a lot to report across major equity markets, very little change there over the course of the day. Looking below that at the sector level, a bit of a different performance there. We can see the more economically sensitive sectors performing a little bit better yesterday. And that just takes us back to that continuation of trend that we saw at the beginning of January, which was interrupted towards the end by that volatility spike that we did see in a particular area of the market. Also, it's worth noting, just whilst there's very little change at index levels, it is important to look below that. We did see and will continue to see companies reporting results that is influencing the share price reaction on the day. For example, Alphabet, Google's parent company, yesterday was up 7%, but you don't actually see that at that overall index level. I think also just in Europe, it's worth just noting the stronger performance from Italy. That came through from and followed on from the discussion yesterday morning about Mario Draghi being asked to form a coalition government there. So we did see a positive reaction both in Italian equities, but also in Italian bonds, where Italian yields come in as a result of that news coming through. Probably in bond markets yesterday, there was a bit more of a reaction and a discussion point there. We saw yields resume that trend of moving out. So we see where the US 10-year this morning, it's yielding 1.14%. Probably this time yesterday morning when we were discussing it, it was at 1.0809%. So a bit of a move out there. And that, again, higher yields associated with an expectation of an improving economic backdrop, and then as a result of that, increasing inflation expectations. Again, just as I touched on earlier, the difference there being in Italy, where we saw yields come in, so the Italian yield ended yesterday at 0.58%. I suppose that initial optimism that we see in the equity market, we see in the bond market from an Italian perspective, we really need that to come through in terms of the delivery of an effective coalition to work its way through the challenges that Italy currently faces. And that'll be, I suppose, what we'll see over the coming days, if that can be achieved, given the challenges that the previous incumbent had in forming that coalition. Just touching on commodity markets, really, we've been discussing silver for the past couple of days. That sort of trade or that trend within silver clearly seems to have dissipated at this point in time. Really, the only story within commodities at the moment, looking at it today, is just that continued move higher in the oil price. And that probably feeds through into that backdrop of story of a slight improvement in economic outlooks, the discipline that OPEC and OPEC Plus are showing as a result. Does also feed into this discussion that we've been having around inflation and the inflationary impact of rising input costs coming through, feeding into price inflation over the coming months. Just then on the economic front, yesterday we had a sea of PMI numbers for the services sector across the globe yesterday. We touched on China yesterday morning. Just looking at what we saw in Europe, a bit of a mixed bag overall. If we look at it at the headline level, we saw a slight deterioration from 46.4 to 47 to 45.4, I should say, for the Eurozone. And that just represents that contractionary territory. So remember, a reading below 50 is the majority of respondents talking about a decline in activity there. Probably within it and digging into it, quite a few interesting trends. We saw quite a marked deterioration in Spanish services PMI. But then the other side of that, we saw, and I think quite surprisingly probably, we saw an improvement in the Italian services number from around 39 to 44 in January. So that just, I suppose, sits a bit contra to some of the other data points that we're getting on Italy at this point, and something to monitor going forward. And for the UK, we saw a decline from 49 to 39 over the course of the month, just as those further lockdown measures that we're all very familiar with really biting into the service sector. Positive within that, looking at the outlook, reading there, the majority of respondents do believe that there is pent-up demand for the services side of the economy, and that as vaccination rates, as we've been touching, increase, measures are reduced, we will see that pent-up demand coming out into the economy in terms of expenditure on services. Probably the real contrast with Europe and the UK reading of that decline in services, just the continued trend in the US to see a positive direction there. So we actually saw an improvement in the services PMI to 58.7 from 57 last month. So just talking about really the difference in approach and the difference in where the US is in terms of its dealing with and or moving through the impact of COVID-19. Just think that, and just remember, I suppose, there that they didn't really enact lockdown measures to the same extent as we have seen in Europe, and that's feeding through into this differential at this point in time. Looking to the day ahead, I think really the main focus for us is likely to be around the Bank of England MPC meeting and what we hear there. No changes expected in rates or the asset purchase programme, but just given that services backdrop that we touched on, it'll be interesting to assess the Bank of England's outlook on the economic environment and the shape of the recovery over the coming months, and also to hear any discussion from the work that they've been doing with the PRA on negative interest rates. I'll leave it there for today. Please do join us again tomorrow. Many thanks.
Thanks for watching. If you enjoyed this video, please leave a like and don't forget to subscribe to the True Potential YouTube channel. If you have any questions or requests for future videos, let us know in the comments.